Let's start with the Medicare levy, the one everyone knows. The Medicare levy is 2% of your taxable income. For most Australian residents, it applies automatically. The exceptions: if you're a single person earning under $27,222 in 2025 to 26, the levy is reduced or doesn't apply at all. It phases in gradually between that threshold and $34,027. For families, the threshold is $45,907 plus $4,216 per dependent child. Seniors and pensioners have higher thresholds. If you weren't eligible for Medicare for part of the year, some temporary residents and visa holders, you may be entitled to a Medicare levy exemption for that period. This is the part of the system most people understand. Where it gets complicated is the surcharge. The Medicare Levy Surcharge is a completely separate charge. It applies if two conditions are both true. You earn above a certain income threshold and you don't have qualifying private hospital cover. For 2025 to 26, the single income threshold is $101,000. The family threshold is $202,000 plus $1,500 for each dependent child after the first. If your income for MLS purposes is below these thresholds, the surcharge doesn't apply to you at all. Buying hospital cover won't save you money on tax, though it may still make sense for health reasons. Above the threshold, the surcharge rate depends on your income tier. If you're a single person between $101,000 and $118,000, 1%. Between $118,001 and $158,000, 1.25%. Above $158,000, 1.5%. Here's the key: the surcharge is applied to your income for MLS purposes, not just your taxable income. Your MLS income includes your taxable income plus any reportable fringe benefits, reportable employer super contributions, and any amount on which family trust distribution tax has been paid. If you're salary sacrificing into super and wondering why the surcharge looks higher than expected, your reportable super contributions are going into the MLS income calculation, even though they're reducing your income tax. The trap that catches the most people: having health cover that doesn't actually count. To avoid the Medicare levy surcharge, you need private hospital cover that meets specific requirements. It must be from a registered Australian private health insurer. It must be hospital cover, not extras only, not ambulance only, not overseas cover. And the excess must be no higher than $750 for a single, or $1,500 for couples and families. That last point eliminates a lot of policies that look like hospital cover. If you took out a hospital policy with a $2,000 excess to keep the premium low, you're still paying the surcharge. The ATO does not consider that adequate cover, regardless of what the policy is called. Extras only policies, the ones covering dental, optical, physiotherapy, do not count at all. If you have a standalone extras policy and no hospital cover, you're not protected from the MLS. This is the second most common mistake: people who believe they have private health insurance that exempts them, but the policy type or excess fails the test. Let me go deeper on two scenarios that catch people off guard. The first is income creep into the surcharge threshold. The single threshold of $101,000 hasn't always been that high. It's risen from $90,000 in 2014 to 2015 to the current level. But as wages have grown, and over time, or bonuses push more workers above six figures, more people are crossing the threshold for the first time, often without realising it until their tax return comes back with an unexpected surcharge bill. The surcharge at Tier 1 on $105,000 is just over $1,000. Many people in that income range assume a surcharge is something that applies to high earners. It applies to them. The second is salary sacrifice and the MLS income calculation. If you're using salary sacrifice, for example, putting $10,000 of pre-tax income into super, your income tax is calculated on your reduced income. But your MLS income includes reportable super contributions, which often includes salary sacrificed amounts. The result: you reduce your income tax, but potentially don't move your MLS income below the tier boundary you expected. Or get the MLS income number right before you assume salary sacrifice has fixed the problem. Before I get to actions, here's the calculation that changes most people's minds. On $120,000 with no hospital cover, the Tier 1 surcharge is $1,200 per year. A basic hospital policy with an excess of $500 for a single person often costs between $800 and $1,100 annually. If the cover costs less than the surcharge, you're saving money in net tax terms by buying the cover, and you also have hospital insurance. Many people in the $100,000 to $120,000 range are paying the surcharge and getting nothing in return. 3 moves before you lodge. Move 1. Calculate your income for MLS purposes, not just your taxable income. Add together your taxable income, any reportable fringe benefits from your payment summary, and any reportable super contributions. If that total is below 101,000 single or 202,000 family, you don't pay the surcharge regardless of whether you have health cover. If it's above, move to step 2. Move 2. If you're above the threshold, compare your expected MLS bill to the annual cost of a basic hospital policy. Use an MLS calculator, NIB, Savvy, or the MLS Calc site to get your exact surcharge figure. Then get quotes for hospital cover with an excess under $750 for singles or under $1,500 for families. If the cover costs less than the surcharge, buy it now, keep the certificate, and enter the fund details in the private health section of your return. For many people in the 100 to 140,000 range, this is the single simplest legal tax reduction available. Move 3. Fix your return details. At tax time, make sure you report your spouse's income and family details correctly. The ATO assesses the family MLS threshold based on combined income. Make sure you enter your private health fund details in the private health insurance section of MyTax, not just in the deductions section. If the ATO doesn't see confirmed hospital cover, it applies the surcharge by default. And if you weren't eligible for Medicare for part of the year, temporary resident, overseas, obtain an entitlement statement and complete the Medicare levy exemption section so you're not paying the levy for periods when you weren't covered. This is general information, not personal advice. Your MLS position depends on your income type, family situation, and the specific policy you hold. A registered tax agent or health insurance specialist can model your exact surcharge bill and confirm whether a given policy meets the qualifying criteria. If you want to understand how your income tax brackets and effective rate work underneath the Medicare charges, there's a separate video breaking down how much you're actually losing at common Australian incomes. Subscribe for that and for new videos every week. There's a plain English MLS checklist in the newsletter, link in the description. This is the fine print AU because someone has to read it.